Guys, this is Pumpkin on the second. Welcome to another back testing session. And we're going to actually go over our liquidity strategy. And going to show you guys step by step on how actually market liquidity. So that way we can actually trade with the banks and avoid getting stopped down. Okay. So let's see. I'm going to go ahead and actually look at the replay tool. We'll start. So what we're going to do is we're going to start on the 4-hour time frame. And we're going to mark up external liquidity, okay, on the most recent price. So you see that there's liquidity here, there's liquidity up here. It's like a pretty steep there. So we're going to mark it those areas. It's outside liquidity, it's sales out there. So side liquidity, we stand aside. There's a buy side liquidity. Stand aside as well. And that's all we're going to mark on the 4-hour. Okay. Now, when we switch over to the 1 hour, we're going to be marking internal liquidity. So let's switch over. And let's see here. And so now we see we have our external liquidity here and here at the bottom. How it's interacted with that. So now we also see some external liquidity here, the price rate of liquidity right here, like that is previous high. And then we have some deeper lows here as well. So there's definitely liquidity in the sale. Let's go ahead and mark these up as well. I just want to mark the liquidity right up here. And then we have equal lows here. You see that a little bit here, the same there. Equal lows here. There's the liquidity rate here as well. So I'm going to go ahead and just mark the liquidity right here. All right. So this is the internal liquidity on the sell side. And then this is buy side liquidity on the internal side. So that's what we're looking at the moment. Okay. Now, let's go to the 15-minute. And now we see that price looks like it has traded externally. Looks like it has traded externally. You will see that there was a liquidity rate here, like that this high, traded in, we tested, pushed down. But so price has traded in externally, and it looks like it's about to trade internally. So, but what we need to do is figure out that it might be a real price is going to be. So let's turn on our indicator. So the very first thing we want to do is we want to look at the trend in the market and market structure. And you can see that price has wiped out previous highs. This is our last high here before we got to this high. So it lets us know that we're in the bullish market for the most part. Okay. So the reason why we need to know that is because that way we're going to not be likely to get prices on the back. Okay. Now, since we're in the bullish market, the very next thing we want to do is mark up a Chaucer like this. If it happens. The nearest Chaucer level I see is down here. So I'm going to actually put that down here. But there's a possibility that price could all the way back up to here. If it's in the minute charge. So then going to take my vertical line, go to the most recent swing, and look at that down here. Then I'm going to go to the median. Now I get the median, so I go to the bottom. Let's see if we have any other chops levels. Okay, so we have another chops level here. So we're going to make this a 5-minute without chops. Okay. Okay, but we also actually have a chops down here. So this actually might be half of it. So we'll put the chops right here. Okay. That's when you're going to put on chops. Now, probably can move it up to here. 15 minutes. All right, let's go back to the 15. Okay, so now you notice that part looks like price is respecting this 15-5-minute pullback. The price might be still going to go forward. But you see that price is trading into this fair value gap. But it's also looks like it's respecting this area. So what I want to do is take the bid, open the most recent lows and out of this elevate it to here. So now here, and then I'm going to mark this as the 15-minute fair value. Right. So looks like price rated this previous low. So price might be ready to actually see that further. Now, what we want to see is we want to see the price pull back to this area, validates to say go up. Or if it then validates this area, then it's probably going to pull all the way back down to this 15-minute chops level. Put this see. But this is the problem. That's not. Okay. It's the 15 chops. So at this point, we want to wait for a fair value gap. Okay. So doesn't look like we have a lot of volume here. But let's play the replay tool and see how it plays out. Okay, so it looks like we got some strength there. It's not really a strong fair value gap. Now that might be an issue there. But what we have to remember is that we're out staying in liquidity. So price doing liquidity sweep, it might be testing this fair value gap. So price might temporarily pull back to this area or possibly down to here and go up. So let's see how it plays out. Okay, so they went bullish, we had another liquidity there. So now I'm looking for at least pull back down to here. So we had a fair value gap here, and there was a low here, but we don't have a sign of strength yet, so we don't enter yet. Now, that might be a sign of strength here, maybe. And let's see. So now we got an order block that says 4%. So this might be our entry here. We have a volume here. It looks like a code above this for construction. Now, it could go higher, but we don't have the science done. Now, at that point, we did. So at this point, we would go ahead and maybe go in for a buy. Now, if we're wrong, price break this low, then it may be ready to go down to this level, maybe right out this low, and then go back up. Or it might break this low, continue down in 15-minute pullback. So that would be our plan B. So this is the last week here, so we could probably need our stop loss set here. Then realistically, we probably get tired of that. But now let's see if price hits that direction. Take it from me. Right, so now you notice that price is probably well, we hit all the way up to here, so this would probably be an exit option. But it's still external liquidity, so we want to be very careful. So we probably could have exited out of here. So this here, that we have liquidity up here to previous and here at the top, that would be our exit. So that was about 6 cents, not bad. Okay. So now, so now we have a fair value gap here, and price probably is more likely to go down. Right. But we've already exited out. Now, the bulls are still 4%. But what we want to see is the price is going to validate this pullback. And if so, it might push down further to here. Not that bad. But let's kind of play that. Okay, so technically, you have equal lows here. So you probably still have liquidity in this area. Now, again, you can wait for a sign of strength. Now we have our official rate. Okay. Now, since we have our official rate here, we want to wait for our confirmation point. Now, we see our chart level here. So, this point, we want to wait to see if the price is going to respect this chart level. If not, then we might be declared as in control. And if the bears are in control, there's a possibility that they can come all the way down to this fair value gap and then turn it around, because they might want to wait liquidity here before proceeding up. Because there's liquidity resting up there, but they still need to get back. We haven't rated this area yet. So they might come down and rate this area or come down further and push up. So this would have been a decent sell. You want to take that, but we'll walk bullish. We want to go to sell. The price broke that. There was some strength. And now it looks like that price was some people see. No price actually rated this area. So you had it ready here. So now we want to see what price is going to go next. This is a healthy pullback here. So now we would like to see if price is going to invalidate this fair value gap and go further up, or is it going to validate this fair value gap and shoot it down? So that's what we're going to figure out. Now we have strength, right? Yep. So Let's go back. Let's go back and kind of trade. If it was to reward to it, with it here. And then we will put our stop and loss below this one here. Right? And then we will probably see anywhere for this area. Because it's a lot of activity. Let's see if we're correct. Now, price could wait here, but they see any down as well. So if we're wrong, we would jump out and just get it out to trade. All right, so we got strike. Now, price ready liquidity here is over. So this might be a healthy pullback. This is a healthy pullback as well. Let's see. So we probably strong. Right. So So what you're witnessing here is a liquidity rate. Okay? So if anything, this could have been our first, this could probably have been our TP. We had a took profit here, we had a pull back, and we had to here exit it out. Okay. Now, you see a liquidity rate here. And prices retested here at this liquidity. So that lets us know we have a top level here. But this might be a healthy pullback down to this fair value gap and then go back up further. Or they might come down and wipe out this low, go back up. So let's just see. Ah, guys, see that? Healthy pullback. Liquidity rate. And notice here, this is an example of what's the word I'm looking for? This is an example of price reacting to this level. Okay. So we had a very strong rejection. Okay. It pushed in here really, really strong with this wick. Let's turn off the indicator just to kind of see a little bit. It pushed in, rejected it heavy, pushed in, and then it spin it up. So, so if we wanted to re-edge it, excuse me, then go to the replay tool. This probably would work. Once we close above this candle, but this is a sign of strength, probably hit it into this there. And we would have put our stop loss below this one. Okay. The price is not coming back to that. But now, look at that. Okay. Look at that. Let's see how many points that is. It's from this central here all the way up to here. Let's see. Okay. Say 7 to 10. 54. That's 23 points. Okay. Now, you get 55 micros. That would have been $1,100 pop. Okay. And the reason why price went up like this, it doesn't really be there that pay this thing. So we always trade with the trade. So we'll do one more example. So here's our last example. So again, in the 4 hour, we're going to mark up external liquidity. You can see those in the liquidity road here. Put that up in here. Because we also have liquidity up here. Price like that for previous high. Okay. So this is so it was in price. Again, it's all going to be in the 4 hour. And then go to the 1 hour. You're going to mark up external. Okay. So again, we have a little bit of a rate here. Okay, let's mark that. So we kind of liquidity sell side. Then it also has liquidity up here as well. The price like that liquidity up here. Price over above this recent high. Plus the sale. I'm getting liquidity rate down here. Yeah. But now, you want to go to the 15-minute time frame. So, now, once again, what we want to find out is what trend are we in. So, we see that we're in lower highs. Now we're starting to get higher highs. But this high is bigger than this high. So, it's turning the indicator here. So, now we have an idea of what price to go. So because this here is still open, they haven't wiped this out yet. But that's what we have to look at. So higher highs are higher lows. They're currently bullish, but it looks like that we might be overall. And we might be actually bullish. So let's see what's going on. So now you see consolidation here. Liquidity on both sides. Okay. I'm going to actually put this down here. And then put liquidity is right here. So this might be a seek and destroy bill. Definitely not going to trade this. We need to figure out which area price is going to break out and they take it from there. Now, we're overall bullish. So question is, which area price is going to break out first? And this is where we sit and going to let price play out. Now, what I would do is play the replay tool to see if we see anything. We have a grade, but now we need to see some volume. We need to see some volume that breaks one of these areas, but we have a liquidity here and prices actually respect this area. And we have liquidity up here. Which place is price going to break out? So we need to let see. Now this is external liquidity. Now the bulls are saying there's 14%. Now the next thing we want to do is mark up the top levels. So let me go to the bottom. If we don't have any top levels so far, yeah. 15. So this is the most recent top level here. We're going to put this like bottom cash level. Let's see what it's expected. Hope it's not. So now, either the bulls are 15%. Looks like we might have some still. Breaking above this breaker structure. But you don't have much strong wall. So, really doesn't fall. I wouldn't be surprised if price pulls back and test this again. Maybe very good series and back, let's see. But this will be about to go. Yes. At this point, we're not taking it. We do have a fair value gap here. Um, so then the question is price going to respect this fair value gap and give us a strong volume? If it does, and it close below this pullback chops, then it might be going bearish and maybe getting down to this fair value gap, and maybe down to this level. But let's see how it plays out first. So whole time we watching price. Okay, so now we have to change the character here. Okay, this is where we actually adjust our chops level, right? And we have a new bullish order block that says 4%. Now, if this might be some volume here, this might be it. The next chemical below here, if we want to target this low, then maybe down to this fair value, You'll likely have some strength in both below here. So this might be it. So let's go ahead and plan our trade here. We can put a stop loss right up when you say that. And I would probably target this low, maybe down to these four down. But we'll see if it corrects. Now, they can wipe out this liquidity and push price up. So if it breaks above this chops level, they're going to try it. It will see. And it could be a healthy pullback as well. Keep going. That price is kind of closing on top of the chops level. So, yeah. So then in this case, we will probably change that bias. And price might be ready to, well, price might actually still be ready to sell, but they're still to this level. So let's wait. I think with this again, but we'll see if it poses some strength. And if it poses some strength, it goes up, then they'll buy. But if it doesn't, then it might be very sad. There's posing some strength with what we could have. Liquidity, but probably doesn't take the stock loss that can be. Right? So notice we got another liquidity rolled up here as well. The price did another one. But now we need to sell it. Let's see if we get around the field, those two. Right. So now, overall, if we would have sold down in here, we could have got a short sale. The price decided to go just liquidity, then decide to go up. So what we do is just adjust. But now, when do we adjust? We don't go to the confirmation further. So, price what do you pay here? Here's what again I would see right here. Or the bulk charts level can be less than. And we have some new liquidity up here. So we will target this liquidity, maybe liquid flow. This might have been at exit. So we go to the computer. Here, over to computer. Value is, I can read another things. Now there's 10 things. Let's do something. Yeah. Let's see. And let's see if price goes up further. You might pull back and go further. It'll be very well this now. Pretty here. So, go below the chart level. Now we have a sound strength. Now, we'll see if price respects this level. So, the price invalidates this level, then they're ready to go all the way down here, possibly. But if it respects this level, then it just have to pull back to the person further. Let's see. Basically, now it's the action strength. Well, we'll see this simple result of that. So, yeah. Now, the rating this, and it's below the chop's level. The wind we could probably trade, instead of out that. Where stop loss here. It already moved down here, but it might be over here. I don't feel that. But let's see. Well, so decide to go bullish. So that's fine. But notice it went bullish, so we make our adjustment, right? So now we're thinking that price is going. Well, I understand why price went bullish because we had a bullish order block, the price was rated. So that was my thing. But so then in this case, price of validate, we will wait for candle to validate this here. Would you do it? Close the block. So then this property would have been like a TP. I'll probably take it all the way up to here. You know, stop loss would probably be right there. The profit. Again. So over here we adjust. So I pretty much should have known for the most part. Now I'm going to say should have known, we don't really know, but it makes sense why price pushed up to this point. Because price really good, expected break of structure. We get a strong rejection, pushed up into the area. But because of that, you got in right here. Really put really got in right here. Right. Just to see. Yeah. So they'll come here, all the way up to here. That was about 15 points. It's not bad. So if you do 15 points times 5 micros, that would be $750. Not bad, right? So yeah, that's how we trade this strategy. So that's it for this session. Let me know what you guys think, and see you guys next time.